The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, just after 9 a.m. Eastern Time. Quite an acceleration to positive territory in markets yesterday. We kick things off slightly in the red this morning with the S&Ps down by 14 points. That's about 0.25% in the red right now, trading at 53.33. NASDAQ 100, we're negative by 86 points. That's about 0.5% in the red, 18,442. Dow right now off almost 0.2%, 39,537 in the Russell. In the positive by 1 point, 2,096. Back to the S&Ps for a moment. I mean, how about the perfect symmetry of these moves lower and higher across the board? Whether you're talking about where we were Tuesday, when the move lower, move higher. When we started on Wednesday, you trade just above the intraday highs on Tuesday. You rip lower almost 200 points. Okay, zooming in on the action we had from where we were Wednesday to Thursday, you almost touch 53.60. You almost make it down to 51.80. That is 180 S&P points. And boom, just like that, you get it all back. Quite a market, to say the least. We'll see how Friday wraps up. Volatility in spades. We get the S&P slightly in the red. We jump over to the VIX this morning. We kick things off with quite an elevated VIX. And since then, we've had extreme volatility, but the VIX between about 20 and 30. We're sitting right now at 2407 in the volatility index. Bitcoin, how about the run? We started the week off at 49,000. We're ending the week right back at 60,000. Up another $1,100 for Bitcoin. That's 2% in the positive. Ethereum, not quite back up to where you were, but we're up another $60, $26.46 for Ethereum. Crude having quite a week to the upside. Crude up by 18 pennies, 76.37. We jump over to that gold contract, continuing to climb, up about $5 to 24.68 in gold. Silver, down 2 pennies, 27.58 for silver. And we jump to the all-important notes and bonds. And a little bit of higher price and lower yield. After the reverberations we had earlier in the week, we spiked to 115.03. Yesterday, the 10-year got back above 2% is where 4%. The 10-year got back above 4%, and we've paired some of that. We're sitting right now at 3.94, the yield in the 10-year. We're up by 13 ticks right now. The 10-year is off by about 6 basis points. We were coming into the session at about 4%, and we're just a little bit under that level right now. We jump over to the dollar index. DXY, quite a spike higher yesterday as yields were continuing to climb to the 4% level, as yields have pulled back a bit, searching for the right verbiage, right? Yields pulled back a bit, 103.20. A little bit of weakness in the dollar index, technically flat on the session, but well off where we were at the highs yesterday, approaching 103.55. We got to keep our eye on the dollar yen, because that carry trade has been driving a lot of what's going on. The yen just sputtering around at about 147 right now. You're technically negative by 62 pennies. You take a look at the yen on a daily, pretty remarkable. You trade from 142 at the beginning of the year up to 162 by July 12th, and within 30 days you give it all back to 142, and we're just off that level at 146.68. We'll see where the yen goes from there. Pretty remarkable action, to say the least. All right, where do we kick things off? We'll kick it off with some big level analysis, at least in terms of macro, right? Have we breached key levels? We'll see, man. You got Bank of America, hearting it, says the market sell-off yet to breach key levels. Well, the one thing I will say, which is why I want to kick it off, is for the run that we've had, folks, we're not that far off from the all-time highs, okay? Yeah. When you see moves like we've had, they're pretty dramatic. But even on a 3-year weekly, we're trading at 5,300. We were just at 3,500. You take the move we had in October, we're at 4,100. We're at 5,300, less than a year later. Okay? And just on the most recent move, for some context here. Now, they're talking about moving averages in that article I was just pulling up, which is all important as well. Okay? But just for some context, in the move, and this is the conservative move, okay? The most conservative move is if you take the run we had since April. But if you just start where we were less than a year ago, when the S&Ps were at 4,100, I'm not cherry picking the lows now, of 3,500. I'm just saying the run we had that began in the final quarter of 2023, all you did was touch the 382. Okay, and a 382 retracement would be a natural move in the way the market oscillates. So breaching key levels, no, I don't think we're there yet, regardless of the moving averages. Just keep in mind how mammoth this move has been. And again, that's not taking the cherry pick low of 2022. That's not taking the cherry pick low of COVID at 2174. Okay, that's taking the most conservative point on this run, which was the run that began in October. And even there, we're barely approaching a 382, which was the spike low we got. Pretty interesting, though, when you look at the low on this bar we have on this month. Okay, 5120 on the S&Ps, and ballparking 5110 is the 382. So you pull back to that area, kind of the area we chopped around, and put it back on a daily. Kind of the area we chopped around for a period of time on that initial pullback. And yeah, we hit 5120, and you got 5110 sitting at the 382. So we'll see where we go from there. But nonetheless, yeah, the 200's a big one. Sees the slump if stock winners fall below the 200-day moving average is what you're putting out there. Even as the S&P has dropped 6% from the July record high, it's held above that 200-day moving average. And there you see it, right? Not remarkable when you think about how far we've come, though. And that's why I put things in context. Okay, and there is the October low, which was the last time it dipped below the 200-day moving average. And you dipped below to 4,100, and then we exploded to 5,700. This market's been on a tear, folks. So be aware of the type of volatility that is in play right now when you have something like a NASDAQ 100 that can double in share price over a period of a year and a half, right? Remarkable. From a low of 10,400 to 20,983. Doubles in share price over the period of about a year and a half. NASDAQ 100 hasn't even hit the 382. 382 is at about 17,000. We got to a low this month of 17,351, so about 250 points away from that price level. But as you can see, not even close. And if the S&Ps aren't there, then the NASDAQ 100 definitely isn't there. And I'll pull that moving average up. They're currently hovering just above those levels, the 200-day, but a renewed slide would mean the next support for the S&P 500 would kick in at the highs of 2021, implying a drop of another 10% for the benchmark. Well, geez, we're moving 2 to 3% a day. If you don't think 10% is possible, then I don't know what to tell you, because we are moving 2 to 3% a day. And what were they talking about, the highs of 2021? So is that talking about 4,800 or so? Yeah, they're talking about this high back here. And that would be a natural, somewhere between this high and maybe the high that we had in the middle of 2023. So between about 46.21 and 48.08, that could be the just natural area, right? We're moving that. If you look at this chart, where's the area that you could face a little support? Well, you got 5,000, nice round number, and below that you get these two highs out here, 4,800 in the S&P where we came into 2022, and you get the highs out here of pretty similar area, 46.21, the highs of August 2023. NASDAQ 100, we look at that one, and yeah, you're looking at an area of about 16,700 and about, 16,000. We're trading right now 18,480. All right, folks, take a look at some of those magnificent take a look at the companies with earnings out. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got the S&Ps down by 12 points right now. Jumping around to some of the equities with movement this morning. You got Taiwan Semiconductor. They're a little bit positive by about $4. That's about 2.5% to the upside. Excuse me. The company reported strong July revenue, showing an increase of nearly 45% year-over-year revenue. Pretty remarkable, some of these. I mean, look at the move that you just had from where we were on that dramatic sell-off in the markets at 131, and just like that, this equity is $37 higher. $37. 39 would be 30% off of the lows. So when you hear people buying the dip, man, that is why they buy the dip. And you might be wrong sometimes, but a company like Taiwan Semiconductor looking to deliver a 30% return buying Monday and selling Friday. Pretty remarkable. You jump around to some of the other chip stocks this morning, you got NVIDIA. What are they doing? They're basically flat at 105. You were as low as about $90 on that open on Monday. So what do they gain? They gain $15 from that open on Monday. Yeah, that's quite a move for them as well. NVIDIA, you jump over to AMD shares. AMD trading at 135 right now. You're basically a little bit lower in the pre-market. They closed at 136.32 as of yesterday. And Intel, yeah, you're positive from where you were on the open on Thursday, but be careful on Intel shares. I've been saying for a while, man. It's a high risk, high reward type play on Intel, man. When you're talking about a company that's going to compete with NVIDIA and AMD, and their plan to compete is to lay off a ton of workers, drive a ton of money into capital expenditure, and hope it works. And that's a tough one if it doesn't. All right, we jump around to some other equities with their numbers. Expedia trading higher. Yeah, how about that one, man? So you have second quarter beat on top and bottom lines. Adjusted profit $3.51 a share on $3.56 billion. The market was looking for about $3 a share on $3.53. So that's quite a beat on the profit side as well. They did caution that macroeconomic factors weighed on travel demand in July, but nonetheless, the market likes that they're beaten. You're up by $12, man. You're going to get a 10% pop on the open for Expedia. We take a little bit of a longer-term picture on Expedia. Well off the highs at 217, we're going to open at about 130 for Expedia on the open. What else we got? Take Two. With their numbers, back to a 15-minute, they're trading higher as well, from about 137.50 to 147.50. Yeah, revenue falling short of estimates, but the company sees strong second quarter bookings. So net bookings rose to 1.22 billion, but the company is looking for second quarter bookings of 1.42 to 1.47. That's quite a percentage increase. 1.2 to 1.4 billion is what they're going to do. You get some decent numbers out this morning. Akamai Technology, they're higher as well. Look at all these equities trading higher, right? $91 to 96. Akamai, yeah, share of the cloud company climbing. They raised their full year outlook, and second quarter results came in better than expected. Yeah, they're in $1.58 versus $1.53. Was expected, and they barely beat on revenue, $980 million versus $977. And for the full year on earnings, they guide to the higher end of the range that the market was looking for there for Akamai. Paramount, with their numbers as well. Paramount up about 0.4% right now. I think I even had an article ready for Paramount, did I? Where are we on Paramount? Yeah, there it is. So the market likes that they're going to cut. A little bit of a different story than some of those equities trading higher on forecast and earnings. No, Paramount, they're going to cut 15% of the U.S. workforce. Yeah, and the market likes that. They intend to cut 2,000 jobs as part of a broader cost savings. Revenue fell as TV licensing fees dropped 48%. How about that, right? Compounding declines in subscription and advertising. Streaming division, they swing to a profit, though. Not bad when you think about how long some of these streaming divisions take to actually turn a profit. But yeah, they are cutting 2,000 jobs, 15% of their workforce, $500 million in cost savings, which includes a headcount reduction as part of a $2 billion in synergies related to its transaction with Skydance. Mr. Ellison's son, right? The job cuts, which will begin in the coming weeks and largely conclude by the end of the year, will target the company's marketing and communications department, employees who work in finance, legal, tech, and other support functions. Getting rid of all those white-collar jobs. Right? Think about it. Yeah, you're talking about marketing, communications, finance, legal, tech, and other support. They're just gutting that company the best they can, man, to save money when the times are tough. So Paramount, they're trading higher a little bit today. You jump over to Warner Brothers Discovery, tough numbers for them on Wednesday, and you're trading basically flat at $7 right now for Warner Brothers. We jump around to some of the other streamers. You got Netflix. They're going to open about $7 lower for Netflix, and Disney shares after some tough earnings as well on Wednesday morning. Or they're basically flat right now. It's been a tough go around for Disney, man. Can't deny that. I mean, look at that weekly. You're challenging the lows of $78 of last year. And remember, folks, okay? I mean, you had the NASDAQ 100 at 14,000, ran up to 20. Disney coming right back to that area right now. 78, you're at 85. We back things up even further. And it is pretty remarkable that you have Disney testing the lows of the COVID pandemic when you think about what was factored into the pricing of equities at that time. I mean, they had Disney Plus to save themselves, but it is pretty remarkable that we were in an environment where we didn't know that parks would exist. Would we be able to go to movie theaters again? Would we be able to go to Disney World again? And Disney is right back at those prices. Now, there is a little bit of light at the end of the tunnel on Disney, and you got 3 films out there. So Inside Out 2, they've already come out with, has topped $1.5 billion. They have Deadpool and Wolverine, which is probably on its way to $1 billion, has scored more than $850 million in global ticket sales. And then you're going to have Moana 2 coming out later this year. So they could get 3 separate billion-dollar flicks coming out this year. I think they had like 9 or 10 in 2019. Maybe they'll mention here. So Moana was out in 2016. Remarkable. That was 8 years ago. We loved Moana at one point in my household. Maybe we'll do it again. That was one of the ones that I really liked. Disney's got some great movies, man. We'll see how Moana 2 does, but definitely, kids, they love Moana. That was a big one. Look at that. So of the 53 titles that have reached $1 billion at the box office, Disney has 27 of them. Man. So you got Avatar, Titanic. That was for Fox prior to the merger, okay? But now are considered part of Disney's collection as they merged with Fox. Additionally, 2 Marvel Cinematic Universe Spider-Man films were co-produced by Disney and Sony, topped $1 billion. However, those are not included in Disney's halls because they were distributed by Sony. But do they talk about 2019? Man, because 2019 was their year. I think they had 9 or 10 separate billion-dollar flicks that came out in 2019. Inside Out 2 is a big one. $1.5 billion, right? Oh, look, this is a good one. So we'll finish this up when we come back from the break. We're coming back for the Open. You want to think a little bit of big picture, folks? Well, we got Star Wars coming down the line in 2026, and then 2027, and an Avatar, and another Star Wars, and a Moana. Stay tuned, folks. We'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
D337, you got the NASDAQ 100 down about 49 to kick off the trading session. 18,474. And the one thing I will say, anything can happen today because, boy, these last couple of days have been pretty remarkable, man. You back things up, as I mentioned earlier in the program, on Wednesday. Yeah, when I finished the program at 10 a.m., we were trading at 53.60. and by the end of the day, we're at 51.80. Reverse that and do yesterday, and I finished the program, and we were trading at about 52.90, and even by then, we were 70 points higher by the end of the day. So pretty remarkable how things have moved throughout the day, let alone where we were at 8:30 prior to the weekly jobless claims number coming in. We were at 52.30. The market's having the best day they've had since about 2022 across the board yesterday with positive prices, and we're holding pretty much right at those levels with the S&P down by just 8 points. NASDAQ 100 down by 54. You got the Dow giving back some of those on the open. We're down by 131 points right now. Let's check in on some of the Magnificent Seven, see how we're kicking off. Apple shares down by 0.3%. Amazon shares up by 0.5% this morning. Microsoft up by 0.5%. Google shares, there's a little bit of a slide, off 1.3%. NVIDIA shares up by 0.5%. Meta down by about 0.3%. And why not Tesla? Down about 0.8% for Tesla shares. All right, jumping back to that Disney story. So, you can see that 1, 2, even 3 movies are not going to save this company, man. They need to turn around everything all at once to get the real acceleration in share prices. They could have 3 separate billion-dollar movies this year alone, and still the price is pushing pandemic lows, which is remarkable. But it is interesting to see the lineup that they have coming down the line. And what has tended to work are not the offshoots of the Marvel Universe. It's the core. Captain America, Brave New World coming out 2025, right? You have Moana 2, as they mentioned, later this year. You got another Lion King flick coming out. Fantastic Four, 4 Steps in 2025 should be a big one. Avatar 3, look for that one, of course, 2025. Avengers, Doomsday, another one could be a big one. The Mandalorian, always a big hit. That ties into Star Wars, of course. And then you have another Moana. You have Toy Story 5. There's nothing like kids' movies. That's Inside Out 2. Should show you everything you need to know. $1.5 billion, right? So they got Toy Story 5, Moana. You got an Untitled Star Wars. You have another Avengers. You have another Star Wars. And you have an Avatar 4. So you make it to the second half, or even 2025, right? They have quite a plethora of movies coming up in the next couple years that are likely to drive, and you're going to get more than that, right? You're going to get the toys, you're going to get the games, you're going to get et cetera. I can tell you, Toy Story's a hit in my house, man. Captain America's a hit in my house out there. Star Wars, not so much yet, but we're only at 3 years old. We'll see where we go from there. All right, let's jump around. What else do we have going on? You know what? I like this story just because it thinks about, sometimes you think about game theory, right? You think about strategies, and many times, trading, okay, especially short term, there's a lot that goes into it. But you always want to think in a way that has someone thought in a way that maybe they haven't thought before. And I just found this one interesting when you're talking about, now this is about volleyball, okay? And I don't know if they have the wrong volleyball's most unstoppable play, which crashed by the Olympics. Maybe they're talking about it. They have football in the headline. I'm not sure why, okay? But you have a pair of volleyball players, and what it basically has to do with, and these guys are in the gold medal match, okay, is that, and I think we're all familiar with how volleyball has worked for a while. You got a bump, a set, and a spike, right? They tend to go bump, set, spike. You got 3 touches, and usually the first one's a bump, and then the second one, they're setting up the spike, and the third one is the spike. And what these gentlemen did is that they said, you know what? We're gonna mix that up. Why is everybody so comfortable allowing the other team to know on which touch the ball is going to get pushed over the net? And so their strategy is they got a jumping set, okay? And so by having a jumping set, they give themselves the option to spike it on the jump set, and if they're getting blocked there, they pass it. I just find it so interesting sometimes how sports get revolutionized by the smallest little detail. Be willing to question the norms sometimes, because it seems like so intuitive and so easy to say, geez, why is everybody so aware of the fact that we're going to spike it on the third hit? Doesn't that give them a little bit too much guidance to be able to set up a block on that? And yes, it does. And they talk about it. It's not easy to reset this. People are trying to mimic them. But of course, it's a strategy that takes time to perfect. And so they're referring to it as football, I guess, so they're talking about the option. And that's why football's option is now becoming volleyball's answer to the run pass option. And you talk about the option, man. College football, that option used to be the deal. So these gentlemen are going for gold. And it's a simple thing like that. You think about it in the Olympics. Remember on the Olympics, the high jump, people used to jump over it forward. And then they realized you could actually just arch your back and go over it in a better way. And they changed the sport basically overnight. This is a certain thing, so don't be afraid sometimes to question it when you look at something as simple as that, where they just said, you know what, maybe we should start spiking on the second hit. Pretty interesting. All right, what else do we got up here? Yeah, let's talk a little bit of Fed. Why not? So, Fed seen rejecting calls for a jumbo rate cut in economist survey. Intermeeting interest rate cut is seen as extremely unlikely. Well, this is like hindsight 2020, right? Where was this article on Monday, for instance, let alone today? Large majority of economists surveyed see only a quarter-point decrease in interest rates coming in September, a finding that it's odds with calls from some of the Wall Street banks for a jumbo cut in the next meeting. Nearly 4/5 of economists surveyed predict the Federal Reserve will trim its rate to a range of 5 to 5.25. It's at 5.25 to 5.5 right now. The median forecast shows just 10% odds for a rare move to adjust rates prior. So you got a 1 in 10 shot. This is just economists. Again, nothing's the holy grail here, but they're looking for a gradual. And I would say it's probably going to be gradual as well, unless the data changes. All right, but we are dealing with an environment that, there is some normalization going on here. Okay, we're at 4.3% unemployment. We just had a bout with inflation that's generational. And you still have pretty decent economic growth going on across the board. You have wage growth. You have initial jobless claims coming down, 233,000. That's a pretty healthy number in the churn for the economy. And so we get to find out where we go from here. But it seems like the market has saved itself a bit. I'm sure that gives the Fed a little bit of pause. I mean, you start cascading down to 4,000 or something like that, and I know I'm being outlandish. That's a 30% acceleration almost from where we are here. Then, there's going to be some, blood in the streets, and yes, that'll force the Fed to a certain degree. But we're not even close to that level right now, folks. Okay? I mean, I just gave you the run of the numbers. I harp on it continually because if you think that we need an emergency cut because the stock price in the NASDAQ 100 has doubled since where we were 18 months ago, that's not what an emergency usually looks like, as you have unemployment under 4.5% and you have jobs still being created on a monthly basis. All right, folks, head on over to the front page of TFNN. Our man Larry Pesavento, he's in there doing his live trading right now. You can still sign up for that. He's in there from 9 a.m. till noon. You can sign up. We can get you in there. And don't forget, my dad, he's got a Market Insights special going on. You can save 75% off your first month. Just enter code MI75 off at checkout. Stay tuned, folks. We'll be right back.
And investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by 9 right now. NASDAQ 100 off just 39 points right now. And look at that weekly tail we got, right? You drive down to a price point of 17,351, and we got a positive bar. You have a positive weekly bar in the NASDAQ 100. What if I told you that to kick off the trading day on Monday, right? Quite the acceleration, to say the least, for sure. All right, jumping back. So, as I mentioned, right on the front page, Larry Pesavento. Check out his live trading Fridays. They're in that room right now, folks. We can get you in there. You can sign up. You'll gain access to the one going on right now. It's the second and fourth Friday of each month. So this month, that's going to be August 9th and August 23rd. And then that kicks in the next month. Will be September 13th, September 27th. All of those are archived as well. So even though you might miss the beginning of it, you can still check it out. And then on Market Insights, you can save 75% off the first month. Now, you always get a 30-day money-back guarantee. Okay, so you're going to pay $169 for the month, but you enter code MI75OFF. Okay, MI75 off. You say 75% off the monthly price of $169 on your first month. I think that knocks off about $126 and change. You end up paying $42 and change for the first month, and it still comes with a 30-day money-back guarantee. So you only even end up paying that $42 if you want to keep it. You end up canceling it. You want a money-back guarantee. You get your $42 back. You get it back if you pay with Tiger Dollars, same deal. And if you want to check out some of the positions he's had this year, check them out. They're right on the order page, folks. He's had some great trades this year. Gold at the beginning of the year, some SPY, some Qs in there. Check it out. And I encourage you to check out signing up as we kick things off for the potential for the Fed coming in with some cuts, and we'll see how fast they come. It seems like 25 is the consensus coming down the line in September, but where do we go from there? That's what I've been saying for a little while, right? 2 to 3 cuts is reasonable and should be expected at this point, but where do we go from there? Because right now we're at 5.25 to 5.5%. You can make a very real case that we should probably be at 4.5 right now, because there's no way the economy is near 5% inflation. You can still be at 4.5%. You can still make sure that the economy is not going to overheat and inflation doesn't come back and roar its head again. But do you really want to drive it down to 4 to 3.5? I don't know. What happened to higher for longer, right? Still a possibility out there. They're going to want to let the data play out, okay? And they're not going to want to drive things back down with emergency 50 basis point cuts. We're still at an unemployment rate of 4.3%, okay? They're going to want to see things play out, because what if we need to be in a higher for longer policy, right? They want to let things play out and let the market tell them whether maybe we should be at a higher rate for longer policy in terms of where we are, in terms of the R star, which is the natural growth of the economy. AI is going to produce a lot of productivity gains, and that is going to help the market in dramatic fashion. And, yeah, So pay attention to that one. And we'll that's a nice segue to this one. JP Morgan, AI. Yeah, they're going to have an AI assistant powered by ChatGPT maker OpenAI. Seems like everybody's pairing up with them, right? But it's going to be called LLM Suite, large language model, I assume, right? Is already helping more than 60,000 employees with tasks like writing emails and reports. Folks, AI isn't going to take your jobs. The person who understands AI is going to take your job. Just make sure you understand AI, okay? Yes, they're going to eliminate some jobs, but other jobs are going to get created in the same realm. It's the same thing that happened with the internet, okay? Yes, it's going to eliminate some tasks. It's going to create other opportunities in the same way. Be one of the best out there that can handle the changes that are coming, because they are coming, man. So you got 60,000 employees writing emails, reports, etc. The software is expected to eventually be as ubiquitous within the bank as video conferencing program Zoom. Yeah, it's going to be everywhere, folks. They designed that suite to be a portal that allows users to tap external large language models and launched it with ChatGPT maker OpenAI. But the key is they can go back and forth with different ones. That's what they talked about here, okay? Rather than developing its own AI models, they designed that suite to be a portal that allows users to tap external large language models, the complex programs underpinning generative AI tools, and launched it with ChatGPT OpenAI, okay? But ultimately, would like to be able to move pretty fluidly across models depending on the use cases. So they're going to be using everything out there. Right? Interesting. The plan is not to be beholden to any one model provider. I think that's a smart play, man, because there's going to be some fierce competition, whether you're talking about Google's Gemini, whether you're talking about Meta's, right? What's Meta going to have out there? Tesla's going to have their model, large language model out there. And it seems like JP Morgan, they're going to have their LLM suite, and you're going to be able to jump around to the large language model that best suits what you need to use it for, and they're all going to be in there as well. Yeah, pretty remarkable. So you got Morgan Stanley has already released a pair of OpenAI-powered tools to its financial advisors. I mean, it's going to be remarkable to see how this thing plays in to tech, to trading. You know, you got Renaissance Technologies out there, man. They built, an AI platform that just crushed the market for decades, and it seems like that eventually computers are going to take over and tell everybody how to best to trade, and they're already almost there, but you're seeing an integration on a larger scale, and it's beginning with JP Morgan. You jump over to JP Morgan this morning, basically flat right now with the market in negative territory. We check out some of the other banks. BAC, Bank of America, down about 0.6% right now. Morgan Stanley slightly in the red right now, down about 0.3%. Wells Fargo basically flat at 52.38. We jump around to some of the airlines this morning. Delta, quite an extension yesterday at positive prices, down about 0.7% for Delta. United is flat, and JetBlue up to $6 from $5 to kick off the week. But boy, you look at that thing long term, right? Off the lows of 342. But boy, we've just been chopping around that $6 range, between about $5 and $6 for the better part of 3-4 months on JetBlue. That's a tough one, man. All right, let's see how some of the big dogs are trading right now. Apple shares, that is quite a weekly bar you got on Apple. Check out that weekly bar. Apple down to 196, and you're going to close the week up almost 10% from where you were at the low of that bar. We're trading at 213.04. Apple flat on the session. Jump over to Amazon shares. They're up by 0.5% right now. Microsoft up by 0.5%. Google in the red by 1.1%. And Meta basically up by 0.1% at 510. Look how well Meta has held up, man. Meta, you're off the all-time high of 542. You're sitting at 510 right now. Quite an acceleration for them as well. What do we have a low of this week? 450. Jeez, you're up $60 from where you were trading at the beginning of the week. That was quite a flush out, man. We'll see if that was the last one. But as I mentioned, we're going to have some volatility coming down the line, folks. So just get ready for it. Don't think, have some patience. Okay, don't chase trades. There's going to be plenty of volatility. They're going to probably come with 25 basis points in September. They're going to leave themselves room, and you're going to see reactions like we saw this week when the market tries to get ahead of the Fed. And the Fed's going to try and wait as long as they can for all that data. The market's going to try and anticipate what that data is going to do. And we're going to have this play out over an extended period of time because the rate cuts are coming in September. and they're going to make sure that we don't let inflation soar. They're going to make sure that maybe we should be in higher for longer, right? They're going to let that all play out, and the market's going to have to adjust to it. S&P is off by 0.3. We'll be right back to finish up the show, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Well, welcome back, folks. We got the S&Ps off 13 points right now. We're getting a little bit of a pop up to 53.35. We were as low as about 53.25 after the opening bell. We made it to a pre-market low at about 8:30 of 53.20. NASDAQ 100 negative by 59 points right now, 18,465. We jump over to the VIX. Volatility index 2407, slightly elevated as you get the market slightly in the red. We keep our eye on notes and bonds. And you get the 10-year right now, positive by about 12 ticks. That's correlating to a yield of just under 3.94, 3.936. We'll call it 3.94% the yield on the 10-year. That's just off 4% where we were back yesterday, okay? And keep in mind, we have the 10-year yield at 3.94% right now. This market is priced for cuts, okay? When you look at the risk reward of this market, we are priced for cuts, okay? Think about it. We are trading back to where yields were over 2 years ago, July of 2022, June of 2022. Remarkable when you put it in that context. Now, where's the risk? Well, you got risks on both sides, to be fair. Okay, the risk, of course, is that things change again. We've been here before, right, where the market said we're getting 5 to 6 cuts this year, and then the economy was remarkably hot, and the Fed said, hold on a second, we're not ready to cut. The market's on fire still. We pared back. So we're at 5 or 6 cuts again. Realize that this just happened in the last 8 months or so, that we were at 5 or 6 cuts, and then the data was stronger than we expected. The other side of that is there's been a longer time for the lag. We're at 5 and 6 cuts again. We're at 5.5% right now. 5 to 6 cuts brings us down back to about a 4% Fed overnight lending rate. And if this economy really weakens, there is dramatic risk that maybe they have to bring it. You heard the conversations taking place 5 days ago on Monday. And so that's the risk that maybe we do. But there are 4 to 5 cuts into this market already. All right, folks, stay tuned. We got our man Basil Chapman coming up next. We got Steve Rhodes coming up after that. Fast Market, Larry Pesavento, Tom Bryant. Thanks so much for tuning in on Friday, folks. Have a great day. Have a safe day. Have a safe weekend out there. We look forward to seeing you back Monday morning. Have a great Friday, everybody.